Good morning, welcome to this update from Phoenix Blue on Friday the 26th of August. I'm Tom Colley and I will talk you through the markets and the news this morning. And we'll be talking all day today about the speech from Janet Yellen, the Federal Reserve's chairman. She's speaking this afternoon at 3 o'clock, but let's have a look at the news from yesterday and before that, before we go on to talk about that. Yesterday we had some negative numbers on German business climate out on the euro. We had some good core durable goods numbers out on the dollar. And on target unemployment claims from the dollar. We weren't seeing very much movement in the market. We haven't seen very much movement all week. Everything has been looking ahead to the 3 o'clock speech by Janet Yellen. However, this morning we have second estimate gross domestic product on the pound at 9:30 and preliminary gross domestic product from the States at 1:30. Then we have Janet Yellen's speech. Now, the speech is part of what they call the Jackson Hole Symposium. Now, that's a meeting of about 20 of the world's most senior central bankers, and the title for the whole two-day event is Designing Resilient Monetary Policy Frameworks for the Future. Janet Yellen's speech itself is titled The Federal Reserve's Monetary Policy Toolkit. Now, although we expect the wording of this speech to be intensely scrutinised by traders around the world, we expect to see volatility. But I have to admit, personally, looking at the title of the event and the title of the speech, I feel they'll be looking for very, very small indications. I think that the event and the speech are more focused upon the central banks being prepared for another crisis in the future, like the one in 2008. The reason for that is we've got such low interest rates, which are, let's call the new normal. We've never seen rates this low for this long before. And the normal way of dealing with any sort of crisis or major recession, those methods have already been used up. And in some cases we have zero interest rates, negative interest rates, where historically we've always looked to reduce interest rates where in times of recession or crisis. So that's a personal view about what I think, or rather what I don't think we'll see come out of that. Let's go over and have a look at the US dollar index. And this week it's been very confined. Look, we had a high test here, a low test here earlier in the week. Basically, that's all suggesting there is indecision waiting for some sort of lead from this speech about future Fed rate rises and therefore future direction of the US dollar. However, as I've said, I don't think we're going to see that, and I think we might still be in and around this indecision up until we get non-farm payroll figures out next Friday and we're fully back into September and the market is fully up and running again. So we will be watching this very closely. We do expect volatility. We'll have all pending orders closed prior to the 3 o'clock speech. Wherever possible, we will be having existing trades with, at the very least, stops at break even, profits taken, all those normal measures to protect us against that. Okay, the other markets around the world have very much been following the dollar. This is the Japanese yen, the US dollar JPY pair. What we've seen here is this is even more confined than the dollar and has been very much under control pending some sort of information to one side or the other. You can see I've marked on a shorter time frame triangle here, suggesting that we might see a break above that. That formation would suggest that the market prefers the upside in on this chart, which means dollar strength and US dollar dollar strength and yen weakness to play out. It doesn't guarantee that. It just suggests it. Similarly, this is the euro chart. We've got a rising wedge here. The price is towards the lower side of that. In a rising wedge, we normally expect price to break to the low side. So again, that market would seem to favour dollar strength to be offset by euro weakness. On the pound is more independent of the dollar than most other currencies post-Brexit at the moment, has to a certain extent its own little world. I think I mentioned earlier in the week we were looking for this harmonic AB equals CD pattern to play out here, up to this significant level here, where we would be looking to trade the market short, as our bias in this market on the longer term is short, and at this moment in time, due to the post-Brexit and all the Brexit risks in terms of news announcements and things like that, or unexpected news, will only be taking short trades in this market, hence the fact that we will wait for price to get up here if it gets up here. Once it does get up here, the AB equals CD pattern will have played out, and then we expect price to come back down at least to the trend line, so that's what we'll be looking to trade through there. Over on the Aussie is on the weaker side. It has its own triangle formation here. Again, it's to the lower side. It would suggest that more likely is a break to the lower side on dollar strength and Aussie weakness. If we go over to the Kiwi, somewhat the opposite. It's right at its highs. It's continuously been testing these highs, and I'm sure will break out above these highs if we don't see genuine dollar strength, or more importantly, if we see genuine dollar weakness that comes out of today. As I've already expressed my opinion, I don't think we're going to see anything significant. So as with all the other currencies, we may be waiting for next week to get a real heads up on where we're going forward for the month of September. Okay, so that's Jackson Hole, Janet Yellen's speech. That's just really everything today. Be prepared for it. Don't have open resting orders, etc., as I've already mentioned. It's not about being right and wrong. We're potentially looking at volatility, which means it's about being spiked out rather than the trade being wrong, but just on short-term volatility as traders try to read into the Yellen speech on a word-by-word basis. One other market that I'm very interested in at the moment is natural gas. Why am I interested in this? Predominantly because of a seasonal pattern. Now, seasonal analysis is one thing we do here at Phoenix Blue on top of commitment of traders analysis and our technical and fundamental analysis. Why am I so interested in this market? Well, here you've got the seasonality pattern for the gas futures going back 20 years. Now, if you follow the highs and the lows through here by date, what you'll find is that this year natural gas has almost perfectly been following its seasonal pattern. What that means is so far this year the market has played out as it's expected, as it predominantly has done over the last 20 years. That gives us the confidence that we can look at a specific opportunity now to take advantage of the next stage of the pattern. Now, this is what I'm talking about. Coming into the end of August, or more importantly, the bullish nature through September, that's a really strong signal. We also look at other seasonal factors which will give us a measure of the probability and the size of that move. But also I like this because look, we've got September, and right through to the middle of December we have the potential in if everything went as per the seasonality pattern, the potential to hold trades to add in, and that really could potentially be a super trade. Now, there is an offset side to this. Commodities are affected by the strength of the dollar. If we see dollar strength, that will hold back the market on a bullish run like that. Conversely, if we see dollar weakness, that will strengthen, speed up, and make the magnitude of that movement greater. The way to think about the dollar is it creates headwinds. It won't stop a commodity doing what it's going to do, but it will restrict, slow down the movement, and that's an inverse relationship. So dollar down, commodities preferred up, and vice versa. We see dollar strength, we're going to see any bullish moods tamed by that dollar strength. Now, if you are interested in this and what we do here at Phoenix Blue, pop on the website, leave us a contact. We've just had our last free trading event, which was on Wednesday. Very shortly, early part of next week, we'll have the dates and timings of the next 4 hours of free trading in London. In the meantime, you can contact us here. This is just a contacts page on the website. You can sign up for a newsletter. You can talk to us about our specific programs, or you can just contact us if you just have a question you want to speak to us. Go through there. We also post at least on average once a day on Instagram. On Phoenix Blue Trading is our name on Instagram. You can tell I don't know a great deal about Instagram, a little bit on the old side for that, but you will see regular updates about events, regular updates on through the day on specific trades we're looking at. We look to post certain trades ahead of time so you can actually see what we're looking at before the trade, and then you'll be able to see whether that triggers, plays out, whether we have a successful trade or otherwise. So something, if you are on Instagram, worth having a look at. Also, we're on Facebook and Twitter, which you can contact through the website there. Okay, guys, one other thing to say is Monday is a UK bank holiday. There won't be an update on Monday. However, it is just a UK bank holiday. If for instance, we do see something out of Janet Yellen's speech this afternoon that gives us some real direction on the dollar. Personally, I will be trading through Monday, but as a UK company, we will be observing the bank holiday, so no morning update. Okay, guys, so have a great day, a great weekend, and a bank holiday if you're here in the UK, and we'll speak to you again on Tuesday. Thank you. Take care.